Was good, everyone? Thank you for tuning in. It's your boy Nelly Nughz, and I'm here to bring you the first episode of the Mars Trading Psychology section, and let's get right into it. Let's go. So, introduction to Forex trading for beginners. Now, what is Forex, you might ask, right? Forex is a great 5-letter word that actually is a somewhat of abbreviation, right? So Forex is the long term is foreign exchange. So the foreign exchange market, right? Forex market. That's what it's basically is. So Forex trading is when you're basically trading the currency of other countries against themselves, right? So you're going to have the quote, which is going to be the first pair that you're trading against the base quote, base pair that you're trading. So when you're trading the markets, you're basically trading off of each pair. That's basically it. Again, like I said, I'm going to keep it very simple so there's no like confusion or anything like that. So when you're looking at what is Forex, Forex is basically just trading money. That's it. That's as simple as it is. Forex is just trading money. That's all you're doing. You're trading money dealing with other country currencies. That's it. That's it. It's very simple, very like easy to like navigate. All right. So how does it work, right? How does, the whole trading Forex thing works, right? So we use a platform, right, which is called MT4, right? MetaTrader 4, right? Or 5, depending on, which one you like. There's 2 of them, Meta 4, Meta 5. That's it, right? So everyone basically uses Meta 4, MetaTrader 4. So with that being said, the way it works is that you sign up with a broker, right? So this broker is basically where you deposit and withdraw your funds, and you're basically trading off of an MT4 platform per your broker's login information credentials to then basically trade to make money, right? Now, here's the thing about the beginner side. As you are a beginner, you have to understand it takes money to make money. So in the beginning, you will be kind of losing money, right? Unless you're jumping out the gate with like a great mentor, such as myself, or or just absolutely just coming off of like a good streak of like understanding like what you're doing, this, that, and the third, right? So you want to make sure, right, that you understand fully what trading is all about, what Forex is all about. So with that being said, there's one website that I send every single beginner to, and a lot of you might already know what site is that. So if you know what site it is, say it with me. 1, 2, 3. babypips.com. BABYPIPS.com. Okay, you can do the /learn, right? LEARN, learn, after the babypips.com /learn, and it's gonna take you to the Schoology of Pips, right? As they called it back then. So I don't know what they call it now. I haven't been in a minute, but in a while. But basically what you're doing there is you're learning everything there is to learn about trading. Everything there is to learn about trading, you're learning there, okay? So if you want to learn how to trade or how to like understand what Forex is, head there. There's a lot to learn there. So, understand that information overload is a possibility, okay? So just keep that in mind, but be grateful for the content of it being basically like there and free and obtainable to you, okay? So the next thing that I like to work through is basically the basic terminology and concepts in Forex trading, okay? So the terminologies that come with the Forex trading concepts are primarily like around market structure, okay? So market structure is basically how price moves when it's moving during the cycle of the market, right? So when it moves on a higher time frame, how it moves on a lower time frame, things like that. So basic terminology that you're going to come across is like in an uptrend, you're going to get higher highs and higher lows. On a downtrend, you're going to get lower lows and lower highs. That's it. So you're always going to go into that process of learning those key elements, right? You're going to want to know what kind of trends there are in the market. There's a bullish trend, which is an uptrend, which means for buys, that's the higher highs and higher lows. And then there's the downtrend, the bearish trend, where you sell. That is going to be consistent of lower lows, low highs, and lower lows, okay? In order for the bullish trend to continue, it needs to consistently break the higher high while it's respecting the lower lows. Now, you might come into the industry where you're going to see people mentioning ceilings and floors. So where the trend is going upward, you want to see the ceilings get broken, but the floors get respected. Okay, the floors would be the higher lows, the ceilings would be the higher highs. So in the opposite side of a downtrend, which is the lower lows and lower highs, you're going to want to see the floors get broken, but then the ceiling get respected as it continues to go lower and lower. Now, the third trend, which is not really a trend, is just a consolidation period or a ranging market. That's it. That means when it's just going up and down in one basically rectangular motion. Like it's just going up and down, up, and it's not passing a certain ceiling or certain floor. Also known as a ceiling could be a resistance, where a floor could be a support, right? So it's just bouncing up and down, up and down, up and down. Now, those are the three trends: bullish, bearish, consolidation, or ranging markets, like that. And that's it. So terminologies will consist of support and resistance, which is basically the ceiling is going to be resistance, which is the highest, and then the support is going to be the lowest, which is the floor. That's it. So it's just that that's just how the terms are for the support and resistance. That's it. So when you use support and resistance, you're going to be basically using a factor of just one price. So the ceiling could be at this price, which will be like $1, and then the support can be at 90 cents. That's how it works out in that way. Okay. Now, other terminologies, since we're talking about price, would be supply and demand. Supply and demand is basically when you draw a rectangular box on a chart and is a conjunction of prices in that box, where you can say basically price will go into that box, and then around that box, in that box, you're going to see some sort of price action that's going to be able to give you any confirmations to where you would want to get in any set price. That's basically all that says. Now, trend lines are like support and resistance, but support and resistance lines, but they're in a diagonal format. Okay, so it's going to be basically on a 90-degree angle, and that's going to basically help you, right? So other things is like tools like Fibonacci. Fibonacci is a sequence of numbers that basically just is duplicated as they go on. You can read all about this on the web. You can read about it and learn about it also on the babypips.com website. It's there, so utilize it, right? Again, I'm not here to make it complicated. I'm here to make it just break down simple. That's it, right? So terminologies and concepts include but are not like limited to the ones I mentioned, but at the same time you want to get used to the main one, which is all about market structure. Okay, that's the higher highs, higher lows, lower highs, things like that. And you want to be able to understand what break of structure is when it's going from bullish and transitioning to bearish, right? Going from buys to sells, going from long, also known as buys, down to shorts, which is also known as sells. Okay, now with that being said, you want to make sure that you can do that for both it going from uptrend to downtrend or downtrend to uptrend. You want to get familiarized heavily with the market structure. Heavily. Okay. Now, the next thing that you want to make sure you are in tune with, as far as when it comes to terminology, is like the time frames. The time frames are heavy when it comes to market structure, because as a higher time frame can be a bearish trend on a lower time frame, it can definitely be a bullish trend. So that means that on a higher time frame, even though it's bearish, on a lower time frame, it's only pulling back because it's going bullish to then turn bearish into the overall trend if it wants to continue respecting that downward trend. That's basically it. Okay, so the next thing that we're going to talk about is setting up Forex trading accounts. So the way you set up your Forex trading account is, first, you want to make sure that whenever you're going to fund an account, right, that you're using money that is not something that you're not like gonna, like, you're not gonna worry about losing in case you do lose, in case you blow your account, anything like that. Okay, you want to make sure that it's money that you saved up. You're already okay with like saying like, okay, I'm gonna put this in the account, I'm gonna give it all my best, and I'm gonna go ahead, and if I lose it, then I'm okay with already losing it. Okay, us traders, we basically say we're gonna make a deposit. Once it's deposited in, we don't even care about it. That's it. If it goes good, good. If it goes bad, well, I already took it off my mind. That's it. Okay, now setting up a Forex trading account consists of a few things, right? You're gonna need like an ID, just because this is the part of the process. They want to make sure that you're you. Your identity is you. They should never ask for your social ever, okay? Unless it's like a regulated like broker, things like that. And possibly I haven't come across any yet that do that. But you know, every broker is different, right? So when you are setting up your account, right, you want to make sure that you have like a good broker, which I'll dive into that later, a good broker, and then that broker itself has great broker has great processing. So processing, I mean that it's great with the processing payments, that it's easy, it's like to deposit money, but also, and most importantly, easy to withdraw your money. So you want to make sure that you're good on both sides of that. Okay, so setting up a Forex account is just as easy as it comes. Like, it shouldn't be difficult. It's just you basically signing up, verifying who you are, and then depositing. That's it. After that, you're good. Now you will need to have your credentials when you sign up for a to create an account with that broker or whatever, just so you can put that into your MT4 or MT5 platform, because that's the platform where you're going to be executing your trades, basically placing buy or sell orders to get into the market to trade. Okay, so that's basically it. Now the role of currency pairs in Forex trading. The role of currency pairs is basically for you to trade them when they're supposed to be traded. Okay, I know a lot of times I see traders that they just trade any pair at any time, and it doesn't matter, and they just stay through that period of where it's just not doing anything, it's just not moving anywhere. You don't want to be trading let's say a US pair when it's like, 5 p.m. You just don't want to. Like, there's nothing really happening around 5 p.m. for US pairs. Everything else is just not moving. Okay, so I know this might sound like a little off, like a little confusing now, but again, this is the beginner stage. You're not supposed to know anything right now. You're supposed to basically be like, okay, I get it. Okay, yeah, this is this, and then continue going. That's it. So the role of the currency pairs in Forex trading is that you're going to want to understand when they're supposed to be traded. Okay, so obviously for the New York session, which is from basically 8:30, it really starts at 9:30 for the New York Stock Exchange, all the way down to 4 p.m., basically 5 p.m. That's it. Okay, the next session, well, technically the first session that starts is at 5 p.m. So excuse me on that. Again, this is on the fly. The first session that starts is at 5 p.m. and it starts on Sunday. So your trading days are from Sunday 5 p.m. Eastern all the way to Friday 5 p.m. Eastern, even though some brokers shut off at 4 p.m. Eastern. So you might just want to make sure you know what your broker operational times are. Okay, so 5 p.m. starts the day, and that starts with the Asian session. That's going to be your JPY pairs all throughout. Okay, the next session after that is going to be your Aussie session. Okay, that starts. So the Asian session is going to start at 5 p.m. Okay, and the Sydney session, which is the AUD pair, is going to start at 7 p.m. So between 7 and 8 p.m. they start really moving. Okay, now the next session after that is going to be the, we really don't mention the Frankfurt session, but I believe that one starts at 2. No one really cares for that one because it's just a kerfuffle of just madness during that session and it's really short. But the next and most important session is London session. That one starts at 3 a.m. Eastern Standard Time. So all of these times that I'm giving you is based off Eastern Standard Time. So basically East Coast. That's it. So after the London session, you're going to go into New York session. Okay. New York session, as I said, starts at 8:30, ends at 4 p.m. Okay. Now, there are such things as overlaps, meaning sessions that overlap would basically include the Aussie and yen pairs, right? The yen and Aussie pairs, basically put in order. And then the London and New York pairs, like Euro USD is the most commonly traded pair or traded currency pair that everyone trades. Everyone usually trades that because typically, especially in the United States, but primarily East Coast, everyone's up. Everyone's up for New York, right? Everyone's up for the New York Stock Exchange and things like that. So everyone's primarily trading Euro USD because it's one of the most favorite currency pairs to trade. Okay. Now, the next thing that you want to go ahead and tune into is being that type of trader that understands where they are in their trading. Okay, so your goal is to basically like understand that you're learning. Okay, so I know I threw a lot at you right now, but this is gonna be like the closing of what I'm gonna tell you. As a beginner, your job is to understand that there's gonna be primarily 3 levels to this learning, right? To mastering trading, right? First, you're gonna be a beginner. This is where you're gonna learn the basics, where you're gonna do everything to learn as much as you possibly can about trading before like you really understand what comes next, right? So you want to indulge yourself in everything that has to do with the basics. Okay, the next thing that you want to understand is when you get done learning the basics, you have to apply it into the charts. Okay, so when you apply it onto the charts, that's gonna be basically like, okay, I know how to, I learned about support resistance. I learned about supply and demand. I learned about market structure. I learned about Fibonacci. I learned about trend lines. Now I need to learn how to draw them. Okay, so you want to go ahead and get to the second stage of your evolution and learn how to draw them on the charts. Luckily for you, I'm gonna be coming out with a whole channel full of how-tos and how to draw this, how to draw that accurately. Okay, so I'm gonna be just spilling beans and knowledge and gems, and as people like to say, nuggets, right, on how to accurately draw these basically concepts, right? These lines of support resistance, trend lines, Fibonacci, how to draw them accurately to where it benefits your trading. So tune in, because like just doing that alone, that's gonna cut your learning curve drastically. Okay, so the next thing that you want to make sure that you do after you understand the basics, and then you're able on the first step, and then the second step being able to apply it onto the charts, the next thing after that basically is finding a good mentor and understanding that you're gonna have to do 2 things when you want to like excel, right? You're either gonna you're gonna create your own strategy and you're gonna trade it the way you just trade it, right? That's what I did, right? I went the hard way, right? But I wanted to be able to solidify my career, my pathway, right? So you either can create your own strategy, or you can adopt a strategy from a mentor, right? So I'll touch more on mentors later on, but just to briefly touch on it, mentors are gonna be like sneakers, okay? Shoes, right? When you go into a store and you want to go ahead and purchase a sneaker or a shoe, the shoe has to fit you and it has to be comfortable, right? So with that being said, it's like if you go into, let's say you go into a shoe store and you're saying, oh, okay, cool, I want this shoe, and you know, it's the one I saw online or wherever in a magazine or whatever, but I want it, but then you try it and it doesn't fit well. It doesn't, like, you know, it's not comfortable like enough for you. But then you see another shoe right next to it that looks almost identical to the one you want, you know, maybe a little off, but it fits perfectly. It's just like that. You might start with a mentor, and then they might not just be for you, for whatever style that they're trading or what they're trading for, you know, and then boom, you got to go and then try another mentor, right? And then maybe he or she has the actual solution that you might need. Simple as that. And that happens quite often, and that's okay. That's okay. You have to know and test waters on where you fit. Simple as that. Now, the whole point of like picking the mentor is basically like you want to make sure that you do your due diligence, right? And make sure that you don't like start like with a scam or anything like that. You want to do the research, okay? You want to do the research. Make sure that you're putting yourself in a position to learn. You know what I'm saying? Like, there's mentors out there that right off the gate you see they have, you know, Ferraris and Lambos and Porsches and Beamers and all the, you know, BMWs, all of that. And then there's some that are more quiet, some that don't care for the whole materialistic things and just want to live comfortably. That's it. So you want to understand that that's where, you know, you want to like be at with a mentor. You want to make sure that he or she has your best interest at heart and they want you to succeed. Okay, that's what I only want for my students. I want all my students to even become better than I am. Like, that's it, because through them I will be happy. Through them I will feel like, yo, I did something right. Even if it's like one person, which I know will be more, I guarantee that. But and man, even before I started my course, man, like I like was teaching people that they went off to flourish. You know what I'm saying? And that right there made my day. And that's where I actually was considering the whole course thing and teaching thing, because, you know, I fell into teaching. But that's another story. Again, your job after you understand like what mentor you want to learn from is to take that strategy and run with it. Once you start losing, you're gonna have losing periods. Do not fear those losing periods. You have to go through those losing periods to come out and win. Okay, so a lot of times people end up trading a strategy, and then because they're losing, they throw it away and they go into another strategy, and then they start winning on that strategy again, and then they start losing again, and then they throw that one away, and then it's just continuous cycle over and over and over and over. And before you know it, weeks become months, months become years, and then you're just like, where have I gone? Where have I gone? That's it. So keep that in mind. Please, please keep that in mind. So with that being said, I didn't want to make this too long, but again, this is the basics, and I wanted to basically be able to contribute as much as possible to and for you. So with that being said, thank you for tuning in to the first episode of the Mars Trading Psychology section. Much love from me to you. Again, if you have any questions, feel free to put them down below. And I love y'all. Like that's it. Like, you know, let's get this bag. Let's get this money. Let's educate, learn, and grow. Have a good night, y'all. Have a good day. Have a profitable week. Deuces.